and welcome to TQ Talks, where we talk taxes and tax-free living 365. Here are your hosts, Craig White, Sebastian Singh, and Patrick Augustin.
And another wonderful episode of TQ Talks.
We're here. We're back. Thank you guys for joining us.
We're back, baby.
Yeah, another day. So listen.
Welcome. This is another episode of our TQ Talks put on by TQ Financial Services. My name is Sebastian Singh.
And listen, we want a sponsor. So you guys, we don't want to keep saying our names. You guys just supposed to say, this is sponsored by, who is this outside? Professional Mobile Detailing. Like, listen.
They can't sponsor themselves right now. But listen, that was Craig White talking.
Because they come linking too many funds.
And Patrick knows everyone's business in the world, and that's who you just heard. We got to redo this.
No, we don't.
That runs.
Let's go then. Let's go. What are we talking about today? What has got us in a tizzy?
No, in a tizzy. Listen, as we continue to do through tax season and we're getting ready to close out, depending on where you guys hear this, it might be already closed, but business owners have a very hard time understanding that taxes are going to be due. So I think we need to touch on that and explain to them whether they're regular LLC single member or if they're partnerships or C Corps, S Corps. I would love for us to explain to them how that works when it comes to the tax ramifications and the fact that they don't budget for a bill. That is one of the biggest issues I have with that. Budget.
Let's back up just a little bit. A lot of business owners still think that they're supposed to get a refund.
Okay, good point.
Bad business
good point.
owners.
Like, it's not bad. It's just they don't understand how it works versus personal versus businesses. S Corps, 1120s, it doesn't really matter. It just don't. They figure, if I'm making all this money, I have all these expenses. Shouldn't I be getting something back? Like, no, you shouldn't be getting anything back unless you have credits. Business doesn't have any credits.
But okay, so then if
or
you're
have made payments throughout the year and overpaid, right?
Wait,
However,
wait.
Before we get into that, I will say I think a big point on that, or a big driving force on that, is the marketing. Is the ads on TV or on radio or on streaming platforms? Yeah, those ads that do push upon people like, "Hey, hurry up and get your refund," to everybody. You know?
Okay, so hold on. Patrick always talks about the educational aspect of almost everything, right? And so what you guys are saying, so we could back this up, is when you're talking about business owners expecting a refund, I think it's more education than anything else. That's Bassie dropping pencils and pens and crap. But that's what it boils down to, because I made an ignorant statement in the beginning, joking, saying it's bad business owners, right? But it's not. Yeah. It's a lack of understanding, a lack of education. So if you're a first gen, as Bassie talks about on a previous podcast, first gen business owner, you don't understand how it's supposed to work. You don't understand what an S Corp does, what a C Corp does, what an LLC does. Like, so let's back up and at least do an LLC partnership, which is the same, but we can work through it real quick. Right. Because that would help them to understand. Because again, to your point on the last one we spoke about, when you're first starting, how would you know if you have no guidance, right? So that's what we're here for. So Bassie's writing. I don't know if you're comfortable talking yet. Do you want to break? Okay. So
no, I'm good. Let Pat jump in real quick.
So Pat, could you walk us through the LLC situation? What happens on you don't have to give them all the details, but hey, it's your personal, and then what happens based on when you have life going on for kids, W-2s or not, and how that would work out.
Well, a sole prop LLC is pretty much it's a business, but it goes in through your personal return. It's not a separation of it's not a separate tax return in a sense, right?
Right.
So whatever business you have is an LLC. Whatever profits and expenses that comes along with that, it goes through, or it goes against if you have a W-2 income, right? So business, for example, made $40,000, right? You brought in $40,000, right? Then you just say you took a $15,000 loss. It's a startup, right?
Okay.
So that $15,000 loss now will go against, let's just say if you had a W-2 income of $60,000. Now that $60,000 that you have that came in from your salary job will get reduced by 15 grand.
Right.
That'll help you get back a refund, maybe a bigger refund than normal. But that's that one scenario if it's going through the LLC versus the 1120 or 1120S.
Right. And and again, on the same LLC, if that was a profitable business, then it in turn would either wipe away, if you had a refund before all that, you'd get rid of the refund and you'd end up owing. Right.
So
it all
because
depends.
of self-employment tax. Any positive income on that Schedule C is subject to self-employment tax.
Right. So the bottom line for that one, we're just trying to get you to understand is, if you have a single member or sole prop is what Pat is saying, but that means a sole proprietorship, then you have to understand that whatever income or loss that you're bringing in is going against whatever you have going on in your life, your interest, dividends, W-2s, investments that you have going on, kids, daycare, all that stuff gets mushed together. It's a separate form, right, that we're doing, but it all gets mushed into one pile. And whatever the final outcome is, that final number will dictate whether you're getting a refund, you're owing money, whatever the case may be.
Numbers, right? Like how much was withheld.
All those things factor.
Yeah, just want to put that out there.
So then we'll jump into multi-member, right? Multi-member LLC, which is a partnership. So it's all three of us make a business, which the normal thing we see is I want to hire my kids. Lord, I want to give something to my kids. So I'm going to put my kids on the name of the business. I'm going to put my partner on the name of the business. Okay, great. But now you're a partnership. You have a 1065 to file, which is a separate tax return. It is not directly on the 1040. It is a pass-through, right? So let's walk through what that looks like.
So with that, all members will be held liable for whatever the income or the expenses or whatever it might be, and need to report that. So if you have 40 members, you have 2 members, you have whatever it is, every member needs to now file the 1065. With that, whatever income or lack thereof. Go ahead.
Not every member files a 1065. The corporation, that business files a 1065, and then the said partners
get the K1.
Get the K1. They each get an individual K1 to now pass through their personal tax return.
Correct. Right. Yeah. Exactly. Yeah.
Go ahead.
But with that, all the members are liable for their share of income expenses, XYZ. So
their
off of that
K1,
correct, it'll tell everybody which member is on there and what they're liable for of the income for the business. With that, though, that also still goes on with your W-2, W-2 income.
If you have that.
If you have that, right, and gets filed singly per individual partnership member, let's say.
Right. So what he's saying is, bottom line is, okay, we do the 1065. There's 90 of us. Each of us are, I don't know, let's make it 100 of each of us are 1%. Yeah. If the business gained $100, each of us are reporting now on a K1. The 1065 goes to the IRS. Wonderful. It's gone. They get it. They're waiting. Okay, let's see what each 100 members says. The 100 members then turn in their personal. So you got to wait on that. That's number one, but we're not going to touch on that. We're just talking about the fact y'all don't pay taxes on it. If that dollar comes over and you were getting a refund of $1 and now as an income of $1, it wipes it away, guess what? You're getting zero. Yeah. Because you have to understand that it's brought over and you got to report it. It goes against whatever you have going on that we spoke about before. We're not going to repeat it, but kids, life, wife, doesn't matter. Daycare, W-2, additional 1099 income, dividends, interest. I don't care what you got, right? Investment properties, everything then comes together with that wonderful K1, whether it's $1 or 10 million or a negative. It can positively or negatively impact whatever it had going on. Same thing for the S-Corp. S-Corp works the same exact way, the same things. We're not going to go through all that again. If there's a profit or loss, as Bassie's already alluded to, it's going to then go to that K1, and each member has to report it, and it will affect whatever you have going on in your life. C-Corp is the only one that's different. C-Corp, you pay taxes directly from that, and federal and state.
Business takes care of its own.
Right. So we'll work C-Corp backwards. So, for example, the reason we're bringing this topic up about you guys don't budget for taxes. If your business brought in $100,000 net, that means after expenses. Don't think you're going to get back a refund. Think I'm going to owe. But here's the educational point for me, right? When I'm talking to people who are not first gen, right? they've been established here for whatever reasons, parents, whatever. There's an understanding that, hey, Craig, I know I'm going to owe X. That's usually what I hear. I know I'm going to owe, help me not to, right? I don't want to pay X. Okay, so.
Help me not to owe as much.
That's literally it. Yeah. So it's the understanding, whether you're a C Corp or an S Corp or a partnership, even a regular LLC, if you make money and, obviously we're going to probably convert you, but ultimately the talk is we don't want to pay as much.
Correct.
That's all it ends up being. But there's an understanding that there's a payment.
That there's going to be a payment, right?
When it comes to us, again, I'm not talking color or race or anything. I'm saying people who have never run a business.
Yeah, first gen,
right?
Yeah.
You don't. There's wait, what?
Yep.
I gotta pay who?
Yep. Hide it, get rid of it.
Right.
Like we don't want to pay anything.
Exactly.
Ever.
And you're missing the mental shift that has to occur. Right? It's no longer a refund season for you. And it might be, but let's be clear. It could be because we can do some stuff. But ultimately, the goal would be to reduce whatever it is out of the profit that I've made because you want the business to be profitable, right?
Right.
And we're not going to touch on tax planning, Pat, because I know that's probably what you're thinking. I see your face.
Not even.
And we can help you to get to that point. But that's for the regular stuff that's going on, you should already be thinking we're holding a percentage of the profit, a percentage of our net profit in order to pay these people. And whatever Sebastian, Patrick, and Craig do to help us reduce that amount is our refund. That's the excitement of it. And you guys can give them percentages if you want,
Oh, that's a good point. I see what you're saying. Like that's the cheddar that we're going to hang out with because we were able to save versus
coming in with a $40,000 tax bill and coming out with maybe an $8,000 tax bill.
Yeah.
That's
$32,000.
Yeah, but
that's a good. I don't even picture that way, but I will now.
It sounds good.
Yeah,
but the receiver thinks like
I still got to pay $8,000.
Gotta pay $8,000, and I still got to pay you your fee.
Right.
I just saved you $32,000. My fee should be relevant.
It's nothing compared to
So shout out to Ravel D'Souza at Empire Tax Service. Yeah, we're giving another service. So one of the things he always says is, "You are not my client." He won't even waste the time to talk to people once he has a discussion and he sees that their mental is not where it needs to be. He is quick to say, hey, listen, it's okay. And he will shake hands and move on. We had a whole conversation today about a client. The same thing. Hey, man, Craig, you even entertained that? Because I thought, we're going to work with a person. He's like, work with him? Why would you work? And I will say this. So, Patrick, to your point of the savings, when I have, which is very rare, thank you, wonderful people, that conversation, you're not my client anymore.
Yeah.
If
we need to have that conversation.
Yes. Because now you've been educated. Before it was the first gen. I
sure,
gave you the shade. You don't understand.
Yeah.
Now if you're still holding on to that
mentality.
Yeah, I was going to say a word. My wife doesn't like that word.
None of us do.
That ninja mentality. I love that word.
I didn't even bring that one up.
That's why I love Rhea. Shout out to Rhea.
Shout out to Too Short. That's what we're going to say, right? Him too. Listen, if you are still holding on to that, then you're honestly not. And I'm speaking for myself. You're not my client.
You're not a TQ client.
I don't want to speak for y'all too.
No, speak for us because we
I don't want that headache.
It's a headache now. And the problem is, even if we deal with the headache now, we're going to deal with it again next year.
That's correct.
Because the mental shift is not happening.
It's not happening.
Yeah.
Because to the point, it's something if you don't know, once you know and you still navigate on that avenue, we're going to go on the street.
Yeah, we're good.
We're taking different
routes. What then persists after that is, well, X doesn't pay any taxes and this doesn't. And I'm like, okay, wait. If you haven't figured out stage one, because that's what we're dealing with. Stage one is just, hey, I have to pay taxes.
Yep.
Stage two is, okay, now we start your tax plans. Stage three is, this is how we avoid. Yes. But if I can't get you to get the understanding of stage one, I'm good with stage 2 and 3 because it's just going to go over your head, or I'm going to spend a lot of time and my temper's going to get the best of me. Next thing I'm choking people in the office. Now I don't want to do that.
Trying to over-convince. It is a nice office.
And there's no value. Remember our value podcast? No value. So that's where it is. Guys, listen, I don't know how long. We don't want to drag this on too much, but the bottom line is, if you are a business owner, then you should be planning to save for taxes. We always tell people 20 to 30% or 20 to 25% of your net is what you should be putting aside, unless Sebastian brought it up earlier. I don't know if we were recording or not about paying quarterly, which I don't want to get into on this one. But
Right.
yeah, you could pay quarterly. So if you
estimated payments,
That's
correct.
also
That's
part
what
of
we're
your
talking
budget,
about.
though. If you're budgeting at 20 to 25%, we're going to let you know, and that's part of that money.
right.
again, we're speaking about not first gen owners.
Right.
Yeah.
Yeah. So again, you budget for that. You say, okay, I brought in for this first quarter 10 grand. Okay, I'm going to put aside 2,000 to 2,500, which I know Pat is going to save from the last. But man, ooh, that's a lot of. Yes, it is.
It is.
It is.
It is.
So,
It is, but it's like you said, it's from that onset of the business operation. Like you need to have that mindset to
You do.
put it away.
Yes.
Like, and forget about it. Just
Right.
put it away. It's
And
not
if-
yours.
And if you can't, here's the thing though. Even if you know it, then cool. I can't do 2. I'm gonna put 1.
Yeah.
Okay,
Right.
great. Put 1.
Something.
Put
Yeah.
something away. That's the
Yeah.
whole point. When you come to see us, if we tell you it's a total of 3 grand and you have 5 grand, guess who's celebrating? You
Yep,
get what I'm saying?
exactly.
But that's what it is. You got to put something.
If
to
you
the
have
side.
nothing and you end up owing, it's going to be even more. Because
Right.
either you're going to pay fees,
Interest,
interest,
all
this,
that, yeah.
that, payment plan. We can help you get through it all.
right?
Doesn't mean it's going to get cheaper. It's only going to get more expensive if you don't prepare ahead of time.
Have our money though. We don't.
We don't work for free.
and no payment plans.
We don't do payment
Nah, man.
plans.
Listen, you can, but once it's all paid up, that's when we.
That's when we file it, but that's okay. That's
got
okay. Our
bills,
the people that get on payment plans to pay the fee are not our clients.
Not really. And I ain't selling my gold chain.
Thank
Y'all missed that podcast. Y'all watch that other one.
you guys for joining us once again. This was another great TQ Talks put on by TQ Financial Services.
Yeah, don't forget to like, follow, share, and hit us up 800-413-1456. Follow us wherever you get your podcasts. That's usually what Bassy said. I just wanted to say it this time because it sounds so cool. Right? And get us a sponsor. Like,
Somebody.
listen, I don't care. What is this? Pure Life? I don't even like this crap, but Pure Life, we'll take it. Cut us a check later.
Thank you guys.
All right, we out.
Thank you for listening to TQ Talks. If you enjoyed this show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at tqfinancials.com.